Yet another loaded question from you. Let me explain. First of all, sometimes it's a matter of not what's the best mortgage for my needs, but what do I qualify for? But let's say you qualify for pretty much all of the mortgages under the sun. So if we were to pick the best one out of what's available, unless you're a veteran or served in any of the branches of the U.S. military, including the National Guard, in which case VA loan is the best one bar none, with no mortgage insurance, with a lower interest rate and a whole bunch of other perks. If that's not the case, then let's talk about the conventional loan. And the reason I say that is because conventional loans, typically conventional mortgages, typically come with the option of automatic mortgage insurance removal once your principal balance reaches 78% of the original purchase price. I'm sure you've heard it from people who got their loans done prior to the crash of 07-08. Oh, you can just reappraise the house and get the mortgage insurance removed. Well, the rules have changed. So that piece we can discuss separately. The conventional loan, nonetheless, in today's terms, is probably the best option out there compared to USDA, FHA, and/or jumbo loans. That said, everybody's situation is different. All things created equal, not everybody's going to be in the house long enough to actually worry about removing their mortgage insurance. Again, conventional loan to the rescue, because your mortgage insurance can be financed into the loan. It can be paid up as a single premium up front, so you wouldn't have that in your monthly payment. It just comes down to figuring out the break-even point and how long you need to stay in the home. Again, these are the questions that I love to ask of my clients. What's your big plan? What are you planning to do with your life? How long you plan to stay in the house? How long you plan to stay in the area? Because again, if it's a long-term loan, conventional to the rescue. If it's a short-term loan, maybe FHA is not such a bad idea. And again, all things being equal, and when the interest rates actually finally stabilize eventually, some of the intermediate or fixed/ARM loans, where the rate is fixed for a period of time, say 3, 5, 7, 10 years, may be not a bad option. But those are all individually answered. So there is no one size fits all, unfortunately. There is no such thing as one loan is good for everybody, because everybody's needs and everybody's life goals are absolutely different. So let's look at your situation specifically and pick the best option for you. And that's where all of my questions come back at you. Ask me the questions and I will answer them for you happily.